have an employment application on every employee. It's a good idea to do a background check depending on your business. We'll give you a link, Social Security number verification. You can go online and verify that they're giving you a correct Social Security number and that it does belong to them. And you should check their reference.
Is that free to go online? Check that Social Security number, or is there? I'm sure if I Google that, there'd be tons of places trying to get money for that.
It's the Social Security Administration itself website, and it doesn't cost anything, but you do have to log in and sign up.
Should we go back to Michelle too?
Was it on that first one?
Yeah.
And then you can just type in the Social Security number, and they'll tell you who that is.
Pardon me?
You'll just type in their Social Security number, they'll tell you who that is.
Actually, you put their name and Social Security number, and they'll come back and they'll say it's verified or not verified. That's it. You can't like go on and do a whole lot other than verify that they're saying who they are. I think it's further on. We have some more things.
Yeah.
Okay.
I saw it at the bottom there.
Oh, did you?
Yeah, right there.
Oh, there it is right there. Okay. Again, employee forms. You're probably familiar if you've ever been an employee. They fill out the W-4, which is a personal allowances worksheet. The employer also has to sign their portion. Keep that on file. An I-9.
You don't have to redo W-4 every year, do you?
No. Christine, you don't recommend we do W-4 every year, do you?
I think it's a good idea because everybody's tax situation changes for them
Yes.
independently. So if you get
Release
information,
offer it, or?
yeah, if the employee doesn't bring it forward, then they don't. But it's nice because if somebody went through, say, a divorce, and the next year they're now single, not married, it's going to change the whole tax situation. So it's a good benefit to offer them to have updated information. So me as an employer, I like to have that kind of information.
As an S corp, am I an employee? I mean, do I need to register it myself?
Register yourself.
Do a W-4 yourself.
I mean, do I have to do these forms myself?
I have them on
I'm a
me.
corp.
I have them on me, so yeah, I treat
So
myself
I
as if
should
I'm
treat
an employee.
myself as an employee
Yeah,
of
good
the S
idea.
corp. Okay.
The I-9, the purpose of the form is to document that each new employee is authorized to work in the United States. There's different sections to complete. The employee does part and the employer does part. The other form that you have is the Colorado Affirmation of Legal Work Status. This is for the employer to complete, saying that you have examined their documents and you say, yes, they are legal, they have a legal work status. We've got on here, call the insurance company to add your employee to your workers' compensation insurance. The employer does that. And then the Social Security number verification, again, the employer could go on and do that. There's also a new hire reporting requirement. And again, these are just reference pages. You're going to report about the employee information, employer information, and then you can report online, you can fax or mail, and there's some things that is a requirement as well. Okay, now we're going to get into something just practical, and it may be very simple, but it can get complex. And so we're going to kind of do two examples, and we're going to let you guys actually do some worksheets. We're going to start out just paycheck basics, right? Somebody fills out their timesheet, you would calculate their gross pay, you're going to deduct their taxes, and that equals net pay. Some people are confused between what is gross pay and what is net pay. Gross pay is the amount you're going to pay them before you deduct anything. Here's some scenarios. You can do gross pay, which is the number of hours times the rate of pay, or a fixed salary amount, minus taxes, blah, blah, blah. Like we were saying, Social Security, Medicare, federal and state withholding, other deductions, and that equals net pay.
Those other deductions, by that you mean like 401k contributions that happen out of every paycheck, health insurance coverage.
Right. It actually was about 3 slides. Yeah.
Those kinds of things would fall under other deductions.
Yes. Yep. These are just some slides, actually types of gross pay. We're going to go quickly. Hourly wages, again, salary. You may pay commissions or you may pay bonuses. Those are types of gross pay. And
like sheets in here that are the slides, because it seems like none of the slides are up here.
That's correct, there's 87 slides, so we tried to narrow it down to what you might want to take home. So you can take notes or.
This is in QuickBooks.
Yeah.
If you use QuickBooks,
What's
this
that?
is QuickBooks.
I'm missing, some of these things that just,
Okay.
sorry, you can keep going. It's
No,
just
that's
that
okay.
I'm not gonna be getting everything.
Do you use to slow down?
Oh, well, I can't write as fast as you're going. That's okay.
Right.
That's fine. I'm taking in what I can.
Okay, okay. I guess what I was saying is that wages or gross pay can take different forms.
Right.
It can look like you pay somebody hourly, you may pay them a salary, you may pay them commissions or bonuses. Those are types of gross pay. Before taxes, that's like the starting point. This slide, and we did grab these from QuickBooks, we were just showing you that gross pay affects all these tax forms at the end, and we're not gonna go into detail on exact lines. We'll show you a little bit later, because it's,
Pointless at this
yeah,
point.
yeah, we're just, right. The idea is just to say that wages, payroll can get very complicated is what we're saying. It can be simple if you stay within the lines, but it can get kind of all over the place. Reported tips, they affect these reports in different ways.
Reported tips again is part of their gross pay. I'm just saying, if you have a restaurant, part of a restaurant, you're taxed on your tips. So I'm sure everyone somewhere, part of you have been, like a tipped employee at some point. So if you took $100 home that evening, you're taxed on that $100. You're responsible for reporting it. It's part of your gross wages, besides the minimum wage that they give you as a restaurant.
These are additions and deductions that we were talking about, and they affect your payroll reports. So a simple IRA has an effect on how the reports turn out at the end and how it comes out of your paycheck. And we're going to go into actual examples, so this is kind of just the overview. Yes, an HSA or a health savings account. These are used for employee pre-tax contributions that are qualified plans. There are some plans that aren't qualified. Again, different tax ramifications, and they hit forms in different ways. This is the HSA, the employee part. This happened to be a taxable one. Again, just an example. And then we were saying this is a screen with types of additions and deductions with no effect. So you have your gross pay, you're going to take your taxes out, but you want to do some things before you hand them their paycheck. So you may add some things such as a mileage reimbursement, some accident or health benefits that you want to include in their paycheck, but again, gross minus taxes, now you're down here. You may give them a moving expense or meals, and then some deductions. An example, like an employee loan, if somebody comes to you the week before and needs $100, you pay them their $500, take their taxes out, then you're going to take that $100 out before you give them their net pay. It's quite often you have to deal with garnishments or child support. Again, that's after taxes, gross taxes, it's down here. Or charitable contributions that people may want to run through their paycheck. Meaning, you take it out, you pay the charity. Making sense?
If you wanted to say you loan them $100, but they only want to pay you like $25 a week, how do you put that in to make it only take it out $25 a week and $100?
In QuickBooks?
Yeah.
I'm going to kind of draw, there's that, you have your gross wages up here and your taxes over here, and then there's a screen right here. You would set up an item that was employee loans.
Right.
And you would point that to an employee loan account. And so when you paid them the $100, you would put that $100 in that employee loan account. And as you take it out of their paycheck, $25 at a time, that would deduct $25 each time.
Okay, yeah, because we just had to put in 25 because I didn't know how to.
If you go to the employee, where you set up the employee, so you have the employee center,
Okay.
and there's the employees listed. If you click on that employee, inside of there you have their name and their address and all that information in there. The second average, I don't know, it's like taxes and everything. If you click in there, there's that little box again that will appear inside of their payroll. And you can set up the account in there, you can tell it how much you want it to do each time, and you can give it a limit. So you can put $100 there telling you want 25 taken out, and it'll stop it, so that you, if you forget, on that 5th check, they're not taking out another 25.
Thank you.